Melang, in the previous video, we basically introduced this. We did all adjustments relating to profits, tax, as well as dividends. Now, let us go to basically all that information allowed us to prepare our ordinary share capital note, which is this one here, where we had to calculate the number of shares that were issued during the year using the interim dividends that were given to us. After we got the number of shares that we issued at the beginning of the year, it enables us to calculate what we call APPS, which stands for average price per share. Note that when it comes to the buyback of shares, they must be recorded at average price per share. This is considered to be the original amount that we received when we sold those shares. It's basically the average price that we received when we actually sold those shares. But now that we are buying them back, we are buying them back at a higher price than the one that was originally received, which resulted in us making a loss. Now, loss due to buyback does not go to the statement of comprehensive income, statement of profit or loss, and other comprehensive income. Instead, it comes to your retained income note. And we had dividends, and that loss will be recorded here and in brackets. If it was a profit, we were going to record it without brackets. All right. And this is basically a summary of what we did in the previous video. The only thing that I haven't done that we did in the previous video was to record the shareholders for dividends, which will be recorded in our trade and other payables note. That is your final dividends. Final dividends will be recorded in trade and other payables note. The other part was the part that was relating to income tax. If I remember very well, our provisional payments amounted to 1,462,000, and we haven't calculated our tax yet. Now, our tax for the year will determine whether our income tax is it a receivable or is it a payable. It'll be a receivable if our provisional payments are more than the income tax for the year, and it will be a payable when our income tax is greater than provisional payments for the year. So if it's greater than provisional payments for the year, we will have a receivable, a payable. If it is less than provisional payments for the year, it'll be our receivable. Receivable will be written as sales income tax in trade and other receivables. And if it's payable, it will be recorded as sales income tax in trade and other payables. I hope that makes sense. All right. Now, I'm going to move straight to the first adjustment. Now, let's check the first adjustment. It says that a special insurance policy was taken out and the premium for 12,900 was paid on the 1st of January 2022. So we paid a premium on the 1st of January 2022. But for how long? This is to cover the new stores for 6 months. Meaning that we are only covered for 2 months in the current financial year. For those 6 months, 4 of those 6 months fall outside the financial year. I will start by drawing my timeline for you. Okay, so basically this is what happened. We will start with our financial year. Our financial year will start on the 1st of March 2021. It will end on the 28th of February 2022. We took an insurance on the 1st of January that will cover us until the next 4 months, which will be until the end of June 2022. This is 6 months, okay? And for 6 months, we paid 12,900. Of that 6 months, 4 months fall outside the financial year. And that 4 months that falls outside the financial year, because this is insurance premium that has already paid, has been included in our insurance expense, which is already entered in our statement of profit or loss. So that amount for 6 months is not supposed to have been included. So we're going to take it out. because it doesn't fall within the current financial year. And that'll give us 12,900. When you multiply it by 4/6, it'll give us 8,600. And our insurance expense for the year will be 79,900. To get more info on this and how it works, please check out adjustments insurance. It's check on the playlist where I explained to you what an insurance premium is. Now, that 8,600, it is a prepaid expense. A prepaid expense means it's an expense we have paid for, but we have not yet incurred, which is an asset. Prepaid expense will be recorded in trade and other receivables. It's either we're going to receive our money back or we're going to receive a service. And our service that we're going to get here will be insurance being covered for a period of 4 months after the financial year. We together? So that prepaid expense, we are going to enter it in trade and other receivables as prepaid expense. And the amount will be that 8,600. Done with the first adjustment. Let's go to the second one. It says that we have two directors that are still owed 20,000 each. So obviously they're owed 40,000 in directors' fees. One of these directors took 7,000 worth of stock and requested it to be offset against his director's fee. Guys, please note when you get such information, this does not change the director's fee. The director's fee is still 40,000 that we still need to add as an expense in our profit or loss statement of profit or loss. We are still going to have an accrued expense of 40,000. That does not change our director's fees. All right, so our director's fees here will increase from 360,000 we have paid already to we add the 40,000 that we have not paid. It'll give us our total director's fee expense, which will be 400,000. That 40,000 though, however, it affects what we owe the directors. That 40,000, it's supposed to go to trade and other payables, and we are supposed to add it in trade and other payables, and we're supposed to add it as accrued expense. But guess what? Our accrued expense will be reduced by the 7,000 because we don't owe the other director the full 20,000. We owe the other director only 33,000 because they took trading stock. They've paid themselves with trading stock. So we only owe them 40,000 minus the 7,000, which was trading stock given to one of the directors, and that'll be 33,000, which is an accrued expense. That 7,000, however, will affect the value of our trading stock. Now, when you calculate your trading stock, you will notice that at the beginning of the financial year, our trading stock was given to us as 8,532,000, we are simply going to reduce it by that director's fee, which was taken by the director of 7,000 rand. It reduces because the director took trading stock worth 7,000 rand. That was adjustment number 2. Adjustment number 3. A debtor returned goods that cost 8,400 as were not to specification. The debtor was granted a trade discount and was only charged 15,960. They gave you the selling price of goods returned by the debtor. Now, the return of goods affects 4 accounts. It affects 4 accounts. We debit debtors allowances, we credit debtors control, meaning that debtors control will decrease. Those accounts will be affected at selling price. So when we debit debtors allowances, it means that we need to reduce sales by the selling price of 15,960. But at the same time, we credited debtors control. We need to go to trade and other receivables. And when we get to trade and other receivables, we need to subtract that 15,960 from our debtors control. And that's what we are going to do. Subtract 15,960 from our debtors control. I'm done with the selling price. Now let's go to the cost price. I said when a debtor returns goods, 4 accounts are affected. The other 2, we increase trading stock and then we decrease cost of sales. All right, we increase trading stock, we debit trading stock, we credit cost of sales. All we are going to do is to go to our cost of sales and subtract the cost price of goods that were returned, which will be 8,400. At the same time, you are going to increase trading stock. Basically, I'm going to my workings and just increase whatever I have in the trial balance by that 8,400. Please check out debtors, its analysis of transactions. You will see it. It has 4. It's highlighted in green and red under grade 9 and 10 notes where I explained as to what happened. So otherwise, check my debtors allowances video. I do have a playlist for that. Check the first 2 videos where I explained the accounts that will be affected whenever a debtor returns goods. All right. So we won't have 4 accounts affected if it's only an allowance. An allowance, it's when we have omitted a discount or we overcharge the debtor or we allow the debtor to keep the goods, but we reduce the selling price. That one will not have cost of sales, obviously. You know that from grade 10 and 9, I think. We good? Done with transaction. What transaction are we on? Was it 3? Is it 3? Yeah, we're done with it. Now let's go to transaction 4. A delivery truck accident resulted in stock which cost 21,000 being damaged. Interesting. Okay, does this mean now I need to go to my trading stock and subtract that 21,000? I don't know. Let me read further. It says the stock was sold to employees for cash at cost plus 20%. Now, when we sold goods to an employee for cash, 4 accounts are still affected. The only difference is that we don't debit debtors control. Instead, we debit bank and then we credit sales. So sales will increase. We don't have cash and cash equivalent. It was not asked. So I won't deal with the debit side. Normally, I will take that and add it to bank, but we don't have cash and cash equivalent. I'm going to deal with the credit, which requires me to increase my sales. All right. Now, wait. To increase my sales by what amount? I don't know. I haven't read the entire thing. The stock was sold to employees for cash at cost plus 20%. So I need the selling price. How do I calculate the selling price? I am given the cost price, which is 21,000. I'm going to multiply this by 100 plus markup, which will give me 120, and divide it by 100, and it'll give me my selling price of 25,200. I'm going to take that 25,200, add it to sales, which is 25,200. And the other one, I will normally add it to bank, but we were not asked for cash and cash equivalents here. All right. When I did this calculation for a moment, I thought I was wrong because when I marked my work, the memo said the other amount. I think it was 28,800 or something. And I was like, oh, did I smoke something here? And I realized, nope. Actually, it is 25,200. Now, we do have the cost price. Now, I said whenever you sell goods or when goods are returned, four accounts are affected, okay? Now, here we sold goods. We debited bank, we credited sales. That's what I've just did here. Now, we need to debit cost of sales with the cost price, which was 21,000. At the same time, I need to credit trading stock because we sold stock. And to credit trading stock means my trading stock must decrease, and it'll decrease by 21,000. Done, guys. Done. Easy. Easy. And I'm answering this question. And when I answer this question, it's based on the videos I've already recorded. I'm basically following the videos that I've already recorded. As I've said, I actually type these solutions first, and then afterwards, when I'm done, that's when I mark myself to check if I'm actually right. Okay. And all of this, and you can tell that I'm not following anyone's memo here. I'm just following the videos, all the notes I have recorded. That's all I'm doing. I'm simply following all those videos to answer these questions. That's all I'm doing. All right. Now, am I done with that transaction? Yes, I'm done. Done, dusted. Let's go to the next one. Um, the next one talks about the annual physical stock count reveal the following on hand. Now, that simply tells me that I won't have any sales, because if I have any sales, it'll affect trading stock. So all I'm going to do is to close sales and close cost of sales and find the totals, take sales minus cost of sales. It'll give you gross profit. I think they were very generous with marks here because, yeah, there were quite a lot of marks, and I didn't even know where to allocate them to. 23 marks. Like for instance, for these ones, sales and cost of sales totals, I would have given you 1 mark, 1 mark. Okay, probably 2 marks only for that 25,200, and then that's it. That's it. But I had to add marks because I didn't know where to find marks to reach 23 marks. Okay. Now, according to the physical stock count, our trading stock amounted to 8,489,800. Physical stock count is done at the warehouse. All right. And what we have in our books might be totally different to that, because in our books we had 8,500,000 and something, and we adjusted it to goods that were returned. We adjusted it to sales. We adjusted it to the director taking trading stock. According to this, adjusted stock should be 8,512,400. But according to the physical stock count, which is in the warehouse, we've got 8,489,800. Sorry. Now, which one is accurate between the one that we adjusted and the one that was counted? Guys, note that the one that was counted is the accurate one because that is a physical stock taking. We have proof. We can see it. We can touch it. It's there. That is the correct one. So we need to adjust the one that we have adjusted, the one that is in our books. And here we are going to adjust it down. And when we adjust it down, it results in trading stock deficit. And trading stock deficit, we are going to record it under operating expenses in the statement of profit or loss. Remember to show your workings there. Normally, I will give you only 2 marks for that. But as I said, I don't know where to find 23 marks. They're very generous with marks here, I must say. Then they say stationery amounted to 14,500. All I'm going to do is to check how much I've got as stationery in my trial balance, which has already been recorded, by the way, in the statement of profit or loss. And according to the statement of profit or loss, stationery is sitting at 36,400. I need to reduce it by stationery that was not used. Guys, read carefully. You subtract what was not used, and then you get what was used, which is 21,900. Sometimes they will tell you that trading stock used was 21,900, and people will go and subtract it from 34,000. You don't subtract what was used, you subtract what was not used, which is at 14,500. And when you take total stationery expense, which is what we purchased or paid for stationery, you minus what was not used. You will be left with what was used, which is your actual expense, and that will be 21,900. Check out trading stock adjustments as well. It's under playlist trading stock adjustment, where I explained that thoroughly as well. Okay, we good? That's it. Let's go to the next adjustment. It says a customer had overpaid her account by 3,000, as she also supplies the office with printing paper. She requested that the overpayment be transferred to her creditor's account. Basically, we reduced our debtors control by the 3,000, but now we ended up owing this customer. All we have to do is to go to our debtors control and add that 3,000. Because we subtracted it, we have to add it. Add the 3,000. After you've added the 3,000 rand, you need to take that 3,000 rand and add it under creditor's control, because this customer is also a creditor to us. You got it? Now, when you get to trade in other receivables, as I've said, you are going to add the 3,000 rand because it was subtracted. It will give you total debtors control. At the same time, you are going to add that to our liabilities in trade and other payables. And that should give us our trade creditors. That's all we're talking about when we spoke about transferring the credit. It means that this data in the debtors list, their balance was negative, which means we were owing them. It didn't make sense for us to subtract it from debtors control. We had to take that amount and recognize that debtor as a liability, as a creditor, because now we end up owing them. They don't owe us. And debtors are people that are owing us. The people we owe are creditors. All right? We good? Does it make sense? Great. Now, 7. Provision for bad debts must be reduced to 7,200. Oh, there you must celebrate. They're telling you that when we reduce provision for bad debts, it's income. So you will write that as provision for bad debts adjustments under operating income. And that's all you have to do. At the same time, you are going to take that 7,200 and subtract it from provision for bad debts, because the one that you calculated is the accurate one, and the accurate one is 7,000 less than what was given to you. You still good? Are you sure? Sure. Easy, ne? Quite easy. Simple. I told you, counting is quite easy. Just that you don't have to be broke. Don't be broke. Because when you're too broke, you won't even have enough energy to pay for attention. And here you need to pay attention all the time, for you to understand and get that distinction in accounting. And our provision basically that we calculated was that 88,800. Easy peasy lemon squeezy, right? All right. 8. One of the store properties was rented out to a sporting goods shop on the 1st of June 2021. All right. A deposit of 10,000 was received and incorrectly credited to the rent income account. So I'm going to correct that first. I'm going to go to my rent income in the statement of profit or loss and subtract that 10,000. First thing, because they said it was incorrectly credited. So I will subtract it. And then because it was a deposit, and I realized that me and the examiner treated this differently. Because it was a deposit, I saw it in trade and other receivables. I don't know what it was doing in trade and other receivables, but it's a deposit that we received. And normally you will add it to bank, and we didn't have any cash and cash equivalents here. So that deposit, if we had a bank overdraft, we're going to subtract it from, we're going to add it, subtract it from bank overdraft. Okay. You'll understand what I'm trying to say then. But because it was a deposit, I took it and I added it as income received in advance. Okay, because a deposit, this deposit, it's like you're receiving income in advance because you're going to use it as rent income when a tenant fails to pay. That's how it works. Because I did rent for 6 months and that's how it works. So I paid a deposit and then I also paid rent for 6 months. Okay. And if I failed to pay, I could have paid rent for 5 months, and the 6th month they were going to take the deposit and settle my rent. But I paid for 6 months, and at the end of 6 months, they refunded me that money. Obviously, you will realize at the end that you received more than what you are supposed to receive, and therefore you'll make a refund and then reduce whatever you recognize as income received in advance. I put it there as a current liability. So as long as it's in trade and other payables, I realized that the examiner put it differently as deposit for rent. For me, it's exactly the same as income received in advance because that deposit will go towards your rent income when the tenant fails to pay for that month or when they damage something. Obviously, it will be used as sort of like repairs and stuff. I guess I understand why they did it, but it's for rent. And that is my argument in this whole thing. But the thing is, it goes to trade and other payables either way. Okay. The one that they took to trade and other receivables, I think that was a genuine mistake. Now, I'm going to move on. I talk too much. And then it says the rent is received 1 month in advance and was increased by 800 per month on 1 January 2022. Okay, I'm going to be honest. When I did this, all right, I worked it out this way. Let me just do it with you guys. I worked it out this way. Okay, beginning of the year, blah, 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 blah. And then it was increased. It was increased in Jan, and then the end of the year is the 28th. All right. So I made a mistake of thinking that this rent was from the beginning of the financial year. And I realized when I got a decimal that, wait, hold on, go back. So when you get a decimal, just breathe. Go back and read the adjustment carefully. And that's what I did. I went back and read the adjustment carefully, slower this time. And that's when I noticed that there was one important date that I did not put in my timeline, which was June 2021. This is the first time we rented out this property, so we did not have rent income from the 1st of March until the 1st of June. We only started having rent income from the 1st of June. And when you count from the 1st of June until before the increase, which is the 1st of January, that gives you 7 months, if I'm not mistaken. Yeah, it gives you 7 months. And then the increase will be for January, February, March, which is 3 months. So you're going to have 7x plus 3 times x plus 800. That will give us 127,400. Someone might say, hold on, where did you get the 127,400? It's because they gave you 137,400 and they told you that in that 137,400, the 10,000 was not supposed to be there. We could. So when you take 137,400 minus the 10,000, you will get that 127,400. Please do check out a playlist written rent income, rent expense adjustment. That's why I explained how everything works, okay, when it comes to rent. Now, working this out. Normally, when we discuss such a thing, some accounting teachers will be very understanding that we do have maths lit learners, and when we do it this way, we are complicating accounting. It's not about maths, it's about accounting. And I'm like, hold on, wait right there. Guys, you can fool other accounting teachers, but I'm teaching grade 8 maths. This is not done in grade 10, 11, and 12. It's done in grade 8. You should be able to know how to solve for X when you're given such a thing. You're smart enough to solve for this, for X here. You will notice that you'll break the brackets. You'll end up having 3x plus 3 times 800 will give you 2,400. And then 3x plus 7x will give you 10x. And then you'll have plus 2,400. Yeah, I don't like how accounting teachers treat maths learners. They're quite smart. They did this in grade 8 and 9. They know it. They know it. They know how to solve for X here. You will transpose that 2,400 and take it to the other side. You'll have 127,400 minus 2,400. You will get 125,000 divided by 10. It will give you X, which is 12,500. All accounting students should know this because you did it in grade 8 and 9. Everyone did maths in grade 8 and 9. And this is quite simple. Now, note that the rent that you have calculated here, which is X, it's the rent before the increase. Now, to get the rent after the increase, you just add 800 to that 12,500. It'll give you 13,300. And that is the rent we received 1 month in advance. Nice, ne? I gave you an alternative method under rent adjustments. You can check it out there. Okay. All right. And if you are an accounting teacher and you would like to have these slides for when you do revision, feel free to contact me. All right. Okay. So what am I going to do with that rent that was received in advance? I need to go to my rent income and subtract it. I gave you around 4 marks for that. I didn't know where to give marks. That's why I'm saying they were very generous with marks here. It'll give you rent income of 114,100, but that 13,300, I'm going to take it to trade in other payables and write it there as income received in advance. Easy peasy lemon squeezy, right? As we've got serious things to worry about, the derivatives. We have to worry about Euclidean geometry. We have to worry about that distinction in maths lit. I'm taking your worries away here, making this easy for you. And please note that that 10,000 is that deposit. I included it as income received in advance, which is basically income in a way, because, yeah, might be wrong. Stand to be corrected. If you have any better explanation, please drop it under the comments section. But please don't tell me about including that 10,000 under trade and other receivables, because that will not make sense at all. All right, that's it. Let's go to the next one. It's about the loan. They gave you the balance at the beginning of the year, repayments of 577,500, additional loan of 1,500, balance at the end of the year, it's 3,975. Guys, you just have to do that little table. Please check interest expense under the playlist. I always refer you to other videos that will help you understand the concept. Because right now I'm just doing the paper. Um, Hoping that you watched other videos where I explained everything thoroughly. So basically, this is all we have. We don't have interest on loan. We have everything else. You just have to work in reverse. And when you work in reverse, this is what you will have. And you'll end up having interest on loan as 302,500. That 302,500, we are going to include it as interest on loan, which is right at the end of your statement of profit or loss, which is under interest expense. You'll put it there as 302,500, 2 marks for that as well. Okay, I might as well, obviously you will put this in trade and other, not trade, non-current liabilities, but you won't need to, because you'll be given the closing balance, and that is the balance that you need to put there. Now, when it comes to the loan, let me just finish this thing that has to do with the loan. When it comes to the loan, please note the last part where they said interest on the loan is capitalized. Okay, that's fine. Obviously, we know we have to use what we just did when interest is capitalized. Then they say the annual repayment has been increased to 425,000 for 2022. They're saying that for the next financial year, this is how much we are going to pay towards that loan. Immediately when they give you that, just note that you need to take that 450,000 minus from non-current liabilities, which is the loan, and put it in trade and other payables, and you will put it as a current portion of the loan. As I explained all of this, come on, bring me that distinction in accounting. All right. Am I left with anything? No, I'm not left with anything. I don't think I'm left with. This is all the adjustments I've got, right? Yeah, I think I've done everything. So all I'm going to do is just to check my statement of profit or loss, and the only thing I haven't calculated here is that taxation for the year. To calculate that, I took the 4,394,000, which is profit before tax. I minus profit after tax, which is 3,075,800, and it gave me my tax amount, which is the missing figure there, and that will be 1,318,200. Guys, sometimes when things are given to you, you try to complicate them. I don't know why. That was just given to you. There was no need to worry about it. I'm going to take that and compare it to my provisional tax payment of 1,462,000. And that is less than my provisional tax payment. Actually, let me just check. Is it less? Yes, it is less. And since it's less than my provisional tax payment, I'm going to put it in trade and other receivables. My provisional tax payment amount was 1,462,000, and my income tax, which I just calculated, is 1,318,200. So basically, here SARS is owing us because our provisional payments are more than our income tax for the year. Also, check SARS income tax playlist where I explained that thoroughly. You will get 143,800. Come on, guys. Please like and subscribe. Okay, I'm giving you a distinction in accounting here for free, mahala, just like that. Subscribe, share the word, let everybody know. Don't be that friend. You know, like when I was at varsity, when I called my friend Arthur as to what he was doing, because I normally call him because I wanted an excuse not to study. He'll say to me, "Hey, brah, I am studying. I know you want to find an excuse not to study." So don't be that friend when your friend calls you and asks you what you're doing and be like, ah, no, I'm just chilling, watching a movie, I'm about to sleep. When you know very well you're studying and you know very well that you're watching this channel to help you pass, please, please share. Sharing is caring, remember? Alrighty, it looks like that is it with question two. All right. Next up, we'll be doing this, which is question three, cash flow statement. Before you attempt this, check out videos on cash flow statement, all of them. And if you want notes, please, guys, here are the details here. Here are the details. Okay, I'll show you the details at the end. Just use this information to prepare this. Okay. And I hope I did not. Okay. Let me just show you. Oh, you see, this is what I was afraid of. Um, let's hope the site is not there. Oh, it is there as well. Oh no, those are the answers there. I hope I didn't punch in any answers here. Oh yes, I didn't. Here we go. Okay, try those ones out. Um, and check me out in the next video, all right? Thank you for watching again. Please don't forget to share, like, and subscribe, and tell your friend that is doing accounting to check out my channel to help them pass, okay? By the way, thank you, yes, you for watching. I really appreciate it. Kgotso.